Hi traders, and welcome to my video on the least squares moving average, or the LSMA indicator. So this is similar to your standard moving average indicator, with the difference being that it tries to find a better fit to the data. I'm not going to go into the complex calculations behind the indicator. I'm just going to instead show you a few ways in which it can be implemented within your trading. I will say from the start here that I personally don't think there's a great difference between using this and the standard moving average, or a combination of moving average crossovers. That being said, it can help you to filter the market in terms of trend direction, which can help you decide if you're going to go short, sell, or you're going to go long and buy. Okay, you can see that I have the LSMA indicator already on my chart here. This is the MT4 trading platform. I managed to find a copy of the indicator for free to download online. You can use the indicator on any trading instrument: Forex, stocks, commodities, cryptos, indices, etc. And you can also use it on any chart time frame. This is a Euro-Yen EJ 1 hour chart. As I said many times, I prefer to use the higher chart time frames just because I find the signals tend to be more reliable. That applies to technical indicators, candlestick patterns, price action analysis. So the 1 hour chart, 4 hour chart, daily, weekly, monthly. I prefer to catch big moves on these charts. I mean, when you've got moves like this for several hundred pips, I mean, why would I want to be battling with the 1 minute or 5 minute, even 15-minute charts trying to catch moves like that, when I can just spend less time chart watching and potentially still catch some big moves? So that being said, this indicator can be good for identifying the trend direction. Obviously, in ranging markets, like any moving average, is not going to be great. You can see we have a range here. In this range, the indicator, I'm not really going to use it. There's no way to really trade based on the moving average, the LSMA, in this circumstance here. If you're range trading, then fair enough, you can use another indicator to try and pick the tops and the bottoms, but certainly I wouldn't be buying and selling as the price is crossing the moving average. Instead, what I'm going to do is I'm going to wait for a breakout in a scenario like this to the downside. Okay, so we can see that prices come and hit resistance level here, which is a sign that there's going to be a reversal. We also have this big bearish candlestick that completely engulfs the bull candlestick before it. Okay, so this was the trend line to the upside, is also been breached around here. Price is below the moving average, and we see a rally downwards. Now, you could have risked entering here. The problem is that with that is the trend can continue going up, or price may just consolidate. So instead, we can wait for a breakout and then a pullback towards the moving average. This is where it comes in handy. We can use it sort of to gauge an area of a pullback. So once that happens around here, we know we're in a downtrend. The market is making lower highs. We have the pullback, and then I would personally be looking to enter on a breakout of support, which happens around here, just using this previous support level there, which held up. So the moving average there told us the market is moving downwards. We had a pullback towards the MA and then a break to the downside. Some traders may wait for price to close below the moving average, which happened here. Can also be an entry. I was just confident with this level of support here. Plus we have almost a 3 inside down candlestick pattern, another bearish indications from the candlestick patterns that the market is falling. Okay, we have a hammer, shooting star, and various other candlestick patterns. I've got lots of videos on them you can check out. It's just good to be aware of them. So we could time my entry on this breakout here, or the cross back over of the moving average. We know we're in a downtrend, so we're only taking sell trades. I'm not going to look to buy when price moves above the moving average. You can see it's sloping downwards as well. Okay, so we can get in on that initial trade. Had we have done that, I mean, this move would have been good for 400 odd pips. We could have been moving our stop loss, just trailing it on the highs. As price is moving down, we can just move it above the highs. potentially would have been taken out somewhere around here. That's if we didn't exit the position down here, which would have been, it would have been a good chance. We have a W pattern formation there and a breakout to the upside, so we probably would have considered exiting around here in any case, if not before. You can always close part of the position on the way down. You know, if you want to close a quarter, close half, just depends on your own money management. What I wouldn't do is just enter and leave my stop loss here, because then, you know, price could come back up and we've missed out on all this profit potential. Okay, so as the market continues to make lower highs and the downtrend is stronger, the same principle applies. If you want to re-enter or take an initial entry, you can just wait for a breakout away from the moving average and then a pullback. You could possibly enter on the pullback if you want. It does give you a chance to get in earlier. Otherwise, you can just simply use the most recent level of support when you're trading short. We have a wedge pattern forming here, which suggests this could be a good breakout opportunity, and that did play out perfectly. Yeah, likewise another breakout there, and we had the pullback. You had the pullback up here and a breakout again. You could have took the trade on the cross of the moving average to the downside there, stop loss just above this recent high. Yeah, so basically trading short when there's a downtrend and price is pulling back to the moving average is how I would interpret this indicator. Obviously, there's a million different ways you can choose it or use it within your trading strategy. This is just how I would use it myself. Moving on, so once we've made the most out of this downtrend, then we're going to look to see what happens on the other side. And we know this is a level of support. We can see that it's tested along here. Actually holds up quite well. Got a shooting star candlestick pattern there. Falling star, sorry. Or a bullish hammer if you like. And then price continues upwards. Again, we don't necessarily need to jump in straight away. We're going to wait and see how it plays out, because we could just jump in on the cross here and, you know, on the bounce of support, which would have actually been a fantastic trade. However, price could have continued falling, could have been ranging. So we can always just wait for confirmation with the breakout to the upside. This level of resistance here then becomes support down here. So we know that's a significant level. In fact, if we take it all the way back, it was here as well. So here's a key level there. And the breakout holds up as support. We can look to enter on this pullback. If we didn't get in on this initial breakout, which would have been a good trade, in my opinion, you could have potentially got in on this pullback earlier here if you considered that the trend had actually gone up enough from this low point. Could have been a potential entry opportunity on this pullback. Otherwise, we can wait for this pullback and then price to either close above the moving average or break through resistance, as it did here with some force. Just plenty of opportunities to get in. Again, a breakout and a pullback. Could enter on the close above the MA, or if you prefer resistance, it's quite a significant pullback here as well. Big candle up, enter on a breakout resistance or crossover of the MA. There's just ample opportunity to enter on this particular trend. Once we start to get around this area, it's when you can see the moving average starts to turn to a downwards trajectory, so you might want to avoid trading around here, and you can just zoom out and see that, okay, you don't really want to buy too high. That being said, after this pullback, there is still a nice bit of movement left in this trend. Okay, so again, price breaks out, pulls back, you can enter on the pullback around the MA line, and also on a breakout of resistance. See that breakout candle there? No coincidence. Would have been a potential entry point. Okay, bullish candlestick patterns. This is quite a strong level of resistance here. It is breached, it does hold up as support, but price soon drops, as does the MA2 indicate. Once it's here, we don't want to be taking buy trades, just as up here we wouldn't have wanted to be taking sell trades. One thing I would say is, if we just remove the LSMA from the chart, is it really telling you anything that you couldn't have told yourself by just drawing trend lines? I'm not too sure. You know, with support, resistance, trend lines, you can kind of do, you know, you can kind of analyze price action yourself without relying on any lagging indicators, or just use your basic moving average that's included with your trading platform. As always, sensible money management. I like to cut losing trades short, let winning trades run, so you can catch big moves like this. And this is, as I said, a 1 hour chart. I mean, that all the action was in 1 month, you know, several hundreds of pips to be had. Less time chart watching compared to the 5-minute chart, and more reliable signals in my opinion. Well, the 5-minute, 15-minute, 1 minute, whatever your poison is, but I just like to look at the higher chart timeframes for more reliable signals. And as I said, less time chart watching. Okay, hopefully you found something useful in terms of the LSMA indicator. Thank you for watching. Please like and subscribe for more.